What's up everybody, welcome to the channel. Okay, so in today's video I'll be showing you guys a cool boom and crash spike strategy. Right, so make sure to watch this video until the end and also subscribe to the channel and also join my free telegram group. Okay, so let's get started. So guys, this strategy is very easy. Right, at the moment what we can see on the 1 hour time frame is that the market has been consolidating over here. Right, what you can see over here is that the market has been doing this, going down, up, down, up, down, up, down, right? A small consolidation. And after this consolidation happened, right, we can see that price went up, right? You guys see what I'm talking about? It went up. Okay, now let me just make this and fill it in, right? So that guys can see clearly. Check this out. Where the red rectangle is where price had played around. Okay, so as soon as price played around, right, when price was done playing around, it decided to break above this rectangle over here, which is a resistance level, right? Even though it's a small resistance level, we can still mark it as a resistance because that is where price had played around, right? So check this out. That is not our main resistance, but it's still a resistance level, okay? Which in other words is a key level. Okay, and the reason why price did this was because remember, every time price consolidates at the level, right? For example, this was its lowest level it had reached, so we decided to go up. But the thing is, we are not focusing on that at the moment, right? I'm just showing you guys on what price did. We are going to focus on a strategy, right, that you can use in the boom and crash market. So the first thing you want to do is when you use a strategy, you want to start off at higher time frames, right? I repeat, start off at higher time frames because at the end of the day, this is very important. You can't just use the strategy on the 1 minute time frame, okay? Because at the end of the day, it won't work. But if you use it on the 1 hour time frame and the 1 minute time frame, it's gonna be better for you. Okay, guys. So I'm just gonna take on my trend line, okay? And what I can see over here is that the market is doing this, right? The market was trending down, okay? It didn't break above this trend line, okay? But the thing is, if we look closer, we can actually see what happened, right? Check this out. If I draw another trend line, okay, and boom 1000, I can actually see that there was a breakout, right? Check this out. Here's my first touch over here, okay? And then I have my second touch over there. And over here, we can see the price decided to break above this level. And what it was, it went up, okay? So now, once we have found the trend of the market, okay, we can see that this is actually a reversal pattern, okay? And why am I saying this is a reversal pattern? Because that is where price had reversed, okay? Check this out. We just draw the pattern so you can see. Look at that. You guys can see that's some type of wedge pattern, which we call it in Forex. Okay. You guys can see there's the pattern. And decided to break above that pattern and went up over here. And if it breaks above this trend line, it actually shows you that the trend is actually stronger, than the market is going to go in an uptrend for a long time. Okay, so the next thing we want to do is once you find a trend in the 1 hour time frame, you want to scale down to the lower time frames. Okay, so the first thing you're going to do is you're going to add these indicators that I have on my chart. So the first one is going to be your relative strength index. Make sure that your parameters are like this. The period should be 1, apply to close, stars to pixel blue, levels 90 and 10, right? So this is how it's supposed to look like. You won't have anything in RSI, okay? There will be nothing. But what you're going to do after that is you're going to add your Bollinger Bands, right? Your Bollinger Bands. Now make sure that your parameters are like this. The period should be 3, deviation 2.000, sub 0, apply to close, stars to pixel green, no levels needed. Okay, so guys, we already know that the market is trending in a uptrend, right? So let me just add my vertical line because this is where the market started trending upwards. Okay. Now what we're going to do is we're going to go back to the 1 minute time frame and go to the vertical line where the market started to trend in an uptrend. Okay. So over here, you guys can see This is where the vertical line is, right? So what we're going to do now is we're going to look for entries. Okay, so as soon as the Bollinger Bands touches the 10 level, okay, we can actually see that a spike occurred, right? A spike occurred, okay? And check this out. It happened again, right? As soon as the Bollinger Band touches the 10, a spike occurred, right? So that is how you use a strategy. What you want to do is, first thing you're going to do is you're going to go to the 1 hour time frame, look for the trend of the market, okay? If you trade boom 1000, you are going to look for uptrend. Then you're going to scroll down to the 1 minute time frame, hit your indicators, look for the confirmations that I just showed you in this video, and trade, right, and catch the spike, okay? But what you want to do is you want to make sure that the Bollinger Bands doesn't move, right? Because if the Bollinger Bands moves, it means that the entry is not valid. For example, over here, we can see that the Bollinger Bands is at the 10 level. Even though that spike occurred, that entry is not valid if you use a strategy, okay? Because look at that. If you move it, it goes up, right? So you need to make sure that the Bollinger Bands is always at the 10 level when you trade boom 1000, okay? And when it comes to crash 1000, you are going to do the exact opposite, right? Now, let me just go to crash 1000 and show you guys what I'm talking about. Okay, so we're in crash 1000, okay? So what you want to do now is you want to first check the trend of the market. Okay, so we can see that the market is trending in a downwards direction. And how do we know that? Okay, let me just remove this. If I add my trend line over here, right? Okay, I can actually see that the market decided to break below that trend line. Okay, and over here, the market consolidated, right? So check it out. You guys can see this is where the market consolidated for a little bit, right? The market was just playing around. Okay, and if you scale down to the 15-minute time frame, you will actually see what I'm talking about. So for example, check that out. You guys see? If you scale down to the 5-minute time frame, you guys see the consolidation is even bigger, right? So check it out. Okay, that's why I'm saying it consolidated, okay? Because if we scale down to lower time frames, we can actually see it clearly. Okay, but the thing is, price decided to break below this trend line, and that's how we know that the market is trending in a downtrend. Okay, so what we want to do is, if we see this on crash 1000, that is our first confirmation, right? Because remember, crash 1000 spikes to the downward side, right? It spikes in a downtrend, right? So for example, look what happened after the market, after price decided to break below this trend line, okay? It just went down and down and down, okay? And when we go to the 1 minute time frame, okay, let me just add the vertical line over here where prices had broke out, right? We probably may not be able to see that when we go to the 1 minute time frame, but the thing is, even though we can't see that, we still know that the market is trending in a downwards direction, okay? So as you guys can see, it stops over there on the 16th of January 15. Okay, it stops over there. Now check this out. Bollinger Bands, you make sure that you zoom out the chart completely, okay? You make sure that you zoom out the chart completely. Look at the Bollinger Bands. See what it does. Over here, that is the 9th level. Spike occurs, right? Spike occurs. But before you enter, make sure that it doesn't move. So for example, the Bollinger Bands doesn't move over there. Over there, it doesn't move. Look over here. Spike. Do you guys see? A spike happened, right? So over here, the same thing happened over and over again because we knew for certain that the market is trending in a downwards direction. If the market is trending in an upward direction, you are not going to use this strategy, okay, for spikes, right? So for example, over here, it happened again. Bollinger Band starts as the level, okay, spike occurs, right? Now it might look like this, but if you are in a live chart, it's going to look different, right? For example, over here, it looks like after the spike was occurred, the Bollinger Bands touches the 90 level. But if you trade live, you will actually see that the Bollinger Bands is at the 90 level. Then it's going to go to the downside, right? So check this out. This just happened. Check this out. Look at what happened. It spiked. Okay, so guys, if you use a strategy, make sure that if you trade boom 1000, that the market is going in the uptrend, and if you trade crash 1000, make sure that the market is going down in the downtrend. Okay, and then use your indicators. Right, the first time frame I'm going to use is your 1 hour, then your 1 minute, and then execute. So thank you for watching this video. If you find any value in this video, don't forget to like, comment, and subscribe. See you in the next one. Thank you.